Hello traders and investors, Greg here from Master Trader. Thought we'd go over a quick lesson here on using support, resistance, and candlestick analysis, what I call bar by bar analysis. We're not going to get into candlestick names, we're not going to get into connecting dots to trend lines, fib lines, just really simple, basic information that'll guide you to what's happening in the moment, and then put that in the context of the bigger picture and where it's likely to go. So recently the market's pulled back. Well, let's start at the high here. And one of the things that I've been keeping track of for probably a few decades now is what option traders do as far as their bets getting to an extreme level. And right up here, they were loaded up on call options, betting that this market was going to push higher. And then it began pulling back. And what do you think they did down here? You got it. Loaded up on put options right down here. Now, that piece of information doesn't tell us we should take a position or that prices are going to turn around. It tells us that the probability of a turn is likely to happen. And this is where the bar by bar analysis and simple candlestick analysis comes in, as well as support or resistance. So, when prices got down here, we look to the left. There's a prior low here, and notice that it gapped down and prices gapped up above it. That tells us that there was institutional buying that created that kind of a gap, and then prices stabilized. They went sideways at that resistance. Notice the down day, bullish price action off and up until sentiment gets to an extreme, all the way back down. Now, this in itself is a negative event because prices gave back the whole gain. That's not what we want to see. What we want to see under a very bullish scenario is prices pull back to an area where they stalled and then turn around, and they did try to do that and it failed. And this is what creates what I call a measured move, where prices go down to the next reference point. When it got down here, okay, we know option traders are buying a load of puts. They're betting on the crash. It's not going to happen historically. Our bias is that, no, the markets are going to stabilize in this area. It doesn't tell us it's going to take off to the upside here. But in any event, let's just keep it simple to what the prices are doing. Big, red, ugly bar. What does that tell you? Sellers took control. Doesn't look good. Should go down maybe to the 200 MA, maybe toward the bottom of that wick. That would make sense, but we're still looking for things to turn around. Prices actually held, reversed back up again. How powerful a reversal is it? Not too powerful, right? Green, it closed above its open, retraced maybe not even halfway. If we count the tail on the top, we'd say yes. All right, so back up again. Resistance is here. Back down again. Whippy price action. Option traders are still betting it's going to crash down to the lows. Not going to happen. Gap down, big rally up. At this point, we've got 1, 2, 3, 4, 5, 6 bars. It's time to start thinking about being a buyer or being an option seller from the point of selling a put credit spread and taking in income. And one of the things that we also do when the premium is there in our chat room, the green room, you can check it out on our website, is when volatility increases, we look for options that are trading down here. Let's say, just for example, 164-ish, 165-ish, and we sell naked puts that are expiring within 1 to 3 days. Now, this is what happens when you get extremes in volatility, but this is what we're always looking for during a market sell-off when volatility rises. Where can I sell a put option, right, a bearish bet, to those that are betting it's going to crash? We don't believe it's going to, and it's so far away that it's the odds of it hitting it are extremely, extremely low, right? Especially when you consider it, is it going to go there in the next 1 to 3 days? Right? Great opportunity when it sets up. Now, as things went on, red bar, right, retrace maybe about halfway. Remember, we're doing bar by bar analysis. I have a systematic method of doing that. The next one is the most convincing bar because it's a bottoming tail bar. This was a red bar initially, and prices rallied back up. It is time to act, however you're going to do it. Buy the spiders, buy calls, sell puts, sell a put spread, buy a call debit spread, do something with a long bias. As prices come up to the prior high, you back away. Another 100% retracement bullish. What's it going to do here? It's begun to back off. Currently, while I'm doing this, the markets are showing some strength. So we have some bullish price action here. And as long as it can hold up here, that is suggesting it can go higher. What is the next step? Higher to where? And we can go out to a higher time frame and look at more information. And let's do that. And here we have the weekly time frame, where prices have backed off a bit from that resistance area there, and now we want to, can it hold up here? And if it could hold up here, let's say into next week, that would be the similar type of bullish price action that we saw near that prior resistance on the daily chart, which would then open up the possibility to pushing above here. And that is where the real money is going to be made. If prices can get through here, because that is when prices come into what I call a price void, not when they're trading inside a smaller void. Yes, you can make money inside the small void, but the bigger the void, the bigger the money. And this is obviously a bigger void, which could possibly push up to the old highs. I don't know that'll happen, but if we see the bullish price action here, and then we can start pushing through it, that's what the chart suggests. So with that being said, come on in to the Master Trader Green Room, and if this sets up, we will trade it together and make money together. Good trading, everyone.